This is a short guide to buying your first property investment. I'm Charlie, I've been in construction for over 15 years, I've built over 1,000 flats and I've got a small property portfolio of my own. You can split property investing into 3 categories. Level 1 is your standard buy-to-let, Level 2 is your HMOs and your serviced accommodation, and Level 3 is actual developing. You can start off purely investing as kind of turnkey investments. You can renovate, or you can get planning permission and you can develop. Which strategy you pick depends on 3 things: how much time you have, how much money you have, and how much experience you have. So the first step is knowing how much money you have. This will tell you how much you can borrow, which will inform you of where and what you can buy. As an example, say you want to buy a £300,000 house to invest in. With bridging finance, they'll put in about 60% of that money. That means you'll need to put in roughly 40%, which is about £120,000. On top of that, you'll need about £25,000 for the renovation works. The bank will actually pay for the renovations. However, they'll pay it in arrears, so once the work is done, then they'll pay. So you'll need that £25,000 as a buffer, get the work started, and then the bank pay you afterwards. You'll also need about another £20,000 to cover stamp duty, legals, the whole buying process. So you'll need about £165,000 just to get started buying a £300,000 house. Now you know roughly how much you can borrow, you can work out where and what you can invest in. I think that if you can afford to invest where you live, you're going to make life so much easier for yourself. That's always a great way to start. My advice straight away would be to avoid leasehold properties. I would always go for a freehold or a share of freehold. Also, if it's my first one, I want to go for something simple. I don't want to get my hands too dirty. I just want to kind of learn and experience what it's like to be a property investor. Don't take on something too risky. Find something with a decent profit margin that's not going to take too much work. I would go for potentially a rundown house that needs renovating, do it up and then flip it, or do it up, refinance it onto a buy-to-let mortgage and then just let it out. Our next factor is time. The more time you have on your hands, the less of other people's time you need to pay for. Now, management time for a family let, for example, is super easy. I speak to my tenants maybe 2 or 3 times a year, that's it. Say, for example, you have an HMO though, with 6 rooms, each tenant lasts roughly 6 months. That means every 2 months, you're going to have a new tenant. That's quite a lot of management compared to a buy-to-let. One step further than that, if you want to do an Airbnb, you'll probably have new tenants every 2 to 3 days. Again, you've exponentially increased your management time. And finally, you've got your experience. If you know construction, you should be utilising your skills, add a loft conversion or add an extension to the house, do a full renovation. If it's your first time, maybe do a bit of DIY yourself, just redecorate, do new kitchen, new bathroom. The most important step to take though is just to start. Too many people get stuck in the planning phase and don't actually do anything. The greatest property investors all started somewhere.